You are listening to Policybazaar.ae's The Policy Project. We've got you covered.
Hello, ladies and gentlemen. Welcome to a brand new episode of The Policy Project. My name is Sid and I'm the host of this podcast, your go-to person for all things insurance. और आज के एपिसोड में we're going to be talking about life insurance plans जो आपको देते हैं the benefits of market-linked returns and life cover in case of unfortunate events. Now, these investment-linked plans are versatile financial tools as well, which combine life insurance with market-linked investments. And they help you deliver both medium and long-term returns, along with helping you achieve certain life goals. So they allow you to invest in equity, in debt, or a mix of funds as well, offering growth potentials aligned with market performance, empowering you to leverage market opportunities while securing your future, making them a dynamic choice for long-term wealth creation and protection. But to throw more light on this topic, we have experts with us who are here to discuss all about investment-linked insurance plans and everything in between. So please welcome Dr. Pradeep Mishra. He's the General Manager, LIC International UAE. Welcome, sir. Pleasure to have you on the podcast.
Thank you, Sid. Thank you for having me on your show.
Thank you, Ji. And also we have Atul Kathuria. He's the business head life insurance at Policybazaar.ae. Welcome, Atul. As always, a pleasure.
Hi, Sid. Thank you.
All right, Ji. Ready to dive in? Our experts?
Yes, please.
Yes, go ahead.
Okay, Ji. All right. So the first question, Atul, we want to start off with you. What are these investment-linked insurance plans and what are they called? Or uske saath saath, how do they work as perfect balanced insurance plus investment plans as well?
Right. So these investment plans are provided by insurance companies where an individual can choose to invest for a certain number of years. Like I can choose to invest for 5 years, 7 years, 10 years. And I have to pay premiums regularly. I could choose my premium payment frequency to be monthly or annually. And all the investments that I make are invested in global funds across the globe. And it could be market-linked funds or it could be debt funds, depending on one's risk appetite. They can choose to invest in higher growth funds or lower growth funds. And similarly, their growth will also be higher or lower. So that is a broad construct of these plans. And the availability of so many global funds with different risk profiles and different growth profiles and the discipline that you ensure while investing in these, because you have to, if you commit to a monthly investment or an annual investment, so you're disciplined to invest at a regular period of time. That is why these are one of the best options for someone to build their investment portfolio.
Interesting. Pradeep sir, I want to come to you. Okay, how does the investor today, how can they start building their own corpus for a future life goal?
Yeah, thank you, Sid. Always investment is a journey. It's not switch on and switch off. But quickly, I'll just summarize some of the points for any investor who is listening today. For any goal in life, professionally and personally, the first which investor has to do, you sit and write down your financial goals. So half of the goal is achieved the moment you write it down. Second thing is that writing goals with the timelines when you are going to achieve that. That is the very, very critical in any financial decisions. The third thing, which is very important, everyone has a different risk appetite. And based on that, you should choose the investment options. Let us not copy someone else. Oh, he has got 20% return, so he has parked those investment there. So investor has to first identify the risk appetite, in which category they are in, conservative, high risk, and then choose the right investment plan. As Mr. Atul was mentioning about the combining insurance and investment plan. So a lot of, market has full of products. End of the day, you need to choose a product for which you require a proper professional advisor, which Policybazaar, always try to provide overall holistic solutions to the team. And especially since today's topic is very important and we are sitting in Dubai, leveraging your investment with global currency, which is US dollar, that provides a lot of benefits for investors. Most of the Indians who is listening today, they are NRIs. They believe that investing in any part of India is giving a high yield. So let us not go in percentage. Today we'll dive down how US dollar will help us. And last point, Sid, which is very important for investor is that to follow the law of farm. In a farm, you cannot sow your seeds today and tomorrow the products is developed. They have to go through the timelines. So you have to stick to the disciplines to achieve any financial goal in life.
Correct. That was a very important thing that you said, investing in other markets as well. So, how critical is it for investors, especially us living here in the UAE, expats, NRIs? How important is it to diversify into hard currencies like the AED or the USD?
Yeah. So
Correct.
if you invest in US dollar, it is equivalent to the AED. So there is no much difference between the two.
Right.
However, it is critical for financial security and long-term preservation of your wealth. Creation of wealth is one part, but preservations by hedging the protection against the currency depreciations. This is the talk of the town. If you go on the
Right.
data, you suppose you get 8% yield in India and your currency depreciates by 5%. So literally you are not getting any yield. That will eaten away by your taxations in India and your inflation. Whereas in UAE,
True.
the first
True.
thing, diversifier instrument USD will help you to protection against currency depreciation. Second is also access to global investment opportunities, as like in the Policybazaar and LIC International. Also here, we offers all
Right.
international products in US dollars. That gives you global investment opportunity. Any country who is in a growing mode, you can take benefit of that. And last, which is very
Correct.
important, is when you invest in US dollar, this provides stability and better purchasing power. With an example, suppose if you are invested 10 years before in dollars and you try to create $100,000 corpus. So 10 years before in 2015, it was the rate of dollar was with INR was 60 rupees per dollar. Today it is 86, 87. So even if you
Right.
just kept the dollar in safe, it has enhanced by 5-7%. So this is how it helps investors to diversify their investment in dollar.
Very interesting. Now, I want to come back to Atul with the next question. Okay, we talked about the AED and the dollar investments that the NRI should be doing, but UAE comprises of a homogeneous mix of nationalities, right? And many of us, obviously, are from India, non-resident Indians here. If we look towards investing in India, is that the right way?
So I think a lot of us as Indians, our investments, I think Pradeep sir also mentioned, sometimes are a little more emotional, that I have a connect with my home country, isliye I feel ki I want to invest
Right.
there. Another reason could be that, eventually I will need funds there, so why not invest
Right.
there? So I'll answer to both of the
Yes,
points why people, prefer to invest in
absolutely.
India. So on the first point, obviously you are investing your money to grow. So thoda emotional कम और rational ज़्यादा होगा तो it's like best for
Correct.
you to grow your
Correct.
money. If you are seeing the market environment is such that the USD is appreciating significantly versus the INR, then it makes all the sense to invest in instruments which give you opportunity to invest in USD or also AED dirham, because that is pegged to the US dollar, right? So that is the rational answer. And secondly, when you think that vapas India, I have to go back to my home
Right.
country, and that is why I should invest there. But that is also not a rational answer, because any investments that you make here, you can easily, whenever your funds mature, you can return that money back to India, expatriate that to India, and also potentially save on capital gains. Otherwise, if you were investing the same money in India, so there is a double benefit: one, the currency appreciation, and the other is not having to pay the capital gains tax if you were to invest the same money in India, right?
Right.
So ideally, in the current scenario, it makes much more sense to invest in dollar or dirham denominated products and versus the INR products.
So emotional कम practical ज़्यादा होना पड़ेगा यहाँ पे.
Correct. Definitely.
All right. Pradeep sir, coming back to what we were talking about, AED or USD. So now with the market scenario जिसमें हम हैं, that one should consider while investing in local markets, या फिर we should be looking at plans of the UAE insurers which allow to invest in AED or USD. आपको क्या लगता है, which one should we go in for?
Yeah, Sid. So your scenarios are very, very dynamic. There were time when you just buy a blue chip company and just you do the SIP and 15, 20 years, leave the investment and it will become a big tree and that will give you fruits for the life. And now days are gone. Markets earlier was cyclical every 3-4 years. Now it is cyclical every 3 months. Overall macro level, the first thing which investors
Hanji.
market scenario is the currency part, currency fluctuations and economic stability. Any country, if
Ji.
you want to invest, you first have to see your how fluctuations of your currencies are. Because if your currency
Right.
are more fluctuating, it means the yield which you get in percentage will get diminished over the period of time. Second thing is also
Ji.
you have to consider what are the potential of market growth and investment returns. Now, I personally believe,
Hmm.
and it was not a situations 10 years before in India, but now India is a growth market. I'm 100%
Right.
I can tell you any part of the world, if you really want to invest, you invest. India is a growth potential. But the drawback for
Right.
us we get is the currency. So everything has its link. So you cannot have entire investment in India. You need to see the growth. Of
Right.
course, we are getting, but currency is another hit on our pocket. Third is you
Correct.
need to have a liquidity and ease of access. Being an NRI, you stay here. Anything if you buy, there are good Indian companies here, good insurance market here, very
Ji.
regulated market here. So you should buy anything from UAE insurers that will give you global access. Number fourth, which Atul was mentioning, is very, very important, is the taxation part. India is still a lot
Correct.
of taxations. I've been writing a lot of blogs on that. Even if,
Ji.
India, you get 12 to 14% of yield, but capital gain of 12.5%, and then your currency depreciation 5 to 6%, net yield doesn't go
Hmm.
more than 5%, which very easily you can get it in US dollar of more than 8 to 9%. So my
Right.
message to anyone who is listening today, that NRI or any expats, I would personally recommend, it's my personal choice. Again, it's matter of solicitation. You need to
Right.
consider both high growth as well as financial stability.
True, true, true. There was one very interesting phrase that you used, fluctuation of currency. And so, talking a little bit more about that and going into that scenario, with the INR showing volatility over the years compared to the AED and the USD, so how does this impact the attractiveness of INR as an investment currency for, let's say, long term stability for us?
Yeah, Sid, very relevant, especially the Gen Z and Gen Alpha who is listening today. They may not
Correct.
understood the dollar rates then and now. They, most of the time I speak to the client, they say, no, it was 70, 80, and I'm seeing for last 4 years, it is the same rate. So I'll give you some of the outlines. INR
Ji.
has consistently depreciated against the US dollar over the last 2 decades. I'm talking only 2 decades now. In 2010, it was
Hmm.
45 rupees per dollar. Okay, it's now becoming double. You see now 88,
Yeah.
87. So maybe in next 14, 15 years, it is becoming double. And rule of 72, if you use, it's exactly 5% depreciations. However, during
Hmm.
some time in 2015, it was 63 rupees. In 2020, it was 75. In 2022, it was only 76. So from 2020 to 22, it was only $1 loss, 1 rupees of per dollar, but 22 to 24, it becomes 86. So there is a 15%
Right.
downfall in 2 years. So no, and in 2 years, if you see the Indian market, they have given phenomenal 20% of yield, 18 to 20% of Indian market yield between 22 to 24, but your currency
Right.
depreciated by 15%. So if any
Hmm.
NRI is investing in India and getting 20% and getting over on Blue Moon, in net, you are getting only 5% today. So what are the factors? You must understand while deciding. So first of all, many people are talking about that dollar is going to be de-dollarization is happening, which I don't believe on that fact. But as far
Okay.
as INR is concerned, INR and USD, this is a very, very relative. INR will be very stronger, especially on other
Hmm.
currencies. I can talk about China currency or European currencies, on any other currency which is not pegged with dollar, but they operates independently. INR, Canadian currency, you see INR is stronger. But US
Hmm.
dollar, there are four reasons for that. First,
Okay.
inflation and interest rate differentials. US in always try to understand what will be the difference of depreciations minimum for 20 years. Always you see inflation
Hmm.
data of US and inflation data of
Hmm.
India. Always you will see the
Right.
difference of both. Or you can go one more ahead. I'm going slightly technical to make you understand, to see the numbers. GSEC
Please.
rates of India, government security rates of India, and government security treasury rates of US. Difference is if 3%, you assume 3% depreciation. Now the difference is more than 4%. So anytime 4 to 5% depreciation is going to happen. That is number one. Number two, India's forex reserves has improved, and that's one of the reason RBI has controlled the currency for some time. But how long you will control it? Something you
Correct.
have to improve the current account deficit, which is not happening. Why? Because India is the biggest importer of oils, and that global oils contributes 90% of our imports. That's not going to change until unless India got some well of oil in which oil is produced in India, which seems to be a distant dream. Fourth is
Right.
geopolitical and economic uncertainty, which is very, very vulnerable in last 4 5 years. Sid. I think you will appreciate on that. So my only
True.
suggestions as of now is, if you invest in INR and you invest in US dollar, one thing is very clear: INR has to depreciate between 4 to 5% over the long period of time. Second thing is a capital gain tax that is also affecting you around 1.5% of the total yield. Fourth,
Absolutely.
fourth thing, same currency, if you invest here, you can create your higher capital down the line, even if you go back to India and settle. So of course, choosing INR over USD makes a sense, especially for NRIs.
Right.
And recently there is a new development. Indian government is promoting Gift City in India to offer a dollar product, so that even residents can also get some dollar exposures. A lot of mutual funds are coming out with the dollar, his mutual funds in India, so that currency
Right.
depreciation can be hedged. So always when you have to choose between INR and USD, volatility remain the reality for India, and you need to choose the right
Right.
investment strategy for your currency hedging.
Well, that's very well put, sir. But Atul, I would want your inputs also on this one. Talking about the USD and it being the global reserve currency, the AD obviously is pegged to the USD. So, how do these factors make investment in these currencies inherently more secure compared to INR, which, like we were just discussing, it just lacks such global influence?
Right. So I think a lot of this Pradeeps are covered in detail. I'll just
G.
summarize. So two critical factors why USD tends to remain more stable. One is that it is the most or the highest traded currency, right? Even oil purchases happen in
Right.
USD. So anything which is traded most frequently is tends to be more stable. INR, there is not much trade globally, so that is why it will lag behind significantly. Secondly, if you see the US inflation is much lower than India inflation, so that is why the INR is supposed to depreciate versus
Right.
USD. So given these two factors, USD and AED being pegged to USD, both of these currencies will be much more stable in the coming few years, and hence makes more sense for investors to consider these currencies.
Interesting. Now, just finally to summarize, Pradeep sir, your last answer on basically investing. So, when investing in market linked plans, how aggressive should one be about it? And some quick steps to curate an investment strategy for the Gens and Gen Zs, the Gen Alpha, which we were talking about, or even us, millennials for that matter.
Yeah. So first thing, before I come out with some ideas or a strategy, said, let us not be impulsive buyer, because Sid got 20% ill, so I should also invest and go and find out 20% ill. That's the biggest mistake which people are doing. So rather doing something
Right.
first, what we should not do also is very, very important. Again, coming to your
True.
question, aggressiveness. See, level of aggressiveness in market link investments are based on age. First of all, age, which age category you
G.
are, what is your financial goal, short term to medium term to long term, risk tolerance, whether are you seeing the market every day and get stressed, or you just put it and just forget it and understand the matrix of market and you wait for when your financial goals are near. Or fourth is the market conditions. I would personally recommend there should be a well balanced strategy, ensuring long term growth over managing risk effectively. So, some of the things which I can highlight here is, first, as I mentioned at beginning of our podcast, you need to have a written clear financial goals. 5 years I want
Right.
this, 7 years I want this, 15 years I want this, 18 years I want this. There should be very, very clear. Here and there we can understand about selection of instrument. Second,
Right.
start early. Early is very, very important. You may be thinking, sometimes people commit a lot of mistake when kids start going college age, and then 2 years before they start thinking to start for college preparation, college education cost, which is wrong. The child is born, that is the best day to start. As I always say, there is no late in investment. Yesterday was the
Right.
best day, and today is the best moment to start with. So start early will give you
True.
proper time management to reach the goal. Third is budgeting is very, very important. Nowadays, say a lot of things comes on credit. So if your outgo is more in credit card bill settlements, you will not be able to save to invest. So your
Correct.
budgeting is very, very important. Emergency fund I always recommend. And before investment anything, I always recommend to follow a financial pyramid. In pyramid, there are three levels. First level, which is the foundation. Foundation is the insurance part, unpredictable event. Your investment journey should start only when you bought a good life insurance policy. And I mean life insurance means
Right.
pure term plan. That is, your foundation has to be strongest and broadest. Burj Khalifa is tallest in the world because their foundation is very strong. And you need to have a health insurance, life insurance, that is first. And then you go for emergency fund. You need to have a savings which is not capital eroding investments, and then you go for investment which have high risk and high growth. Some of the methodologies
True.
which requires to be taken as a science, and for that you require a doctor. And Policybazaar and in support of LIC also provides a lot of support to the customers to educate them to diversify their assets, especially in asset allocations on three parts: asset class,
Right.
geography, and currency. And last but not the least is review periodically. You need to review it and give some long term. Yoga also 21 days as mentioned science that if you practice, then only things will improve. Here, at least you give
Correct.
a proper time of your instrument to give you a proper yield. So these are some of the things which I can highlight for all Gen G or anyone who is listening who has not yet started investment.
Very, very insightful segment indeed. And thank you so much, Pradeep sir and Atul. Abi, let's move on to our next segment, and it's called Ask Away. Now, here we take up FAQs by our lovely customers and we respond to them with the help of our experts. So, if you too are inquisitive, if you too are a curious learner like myself, and you too have questions about finance, about insurance, then don't hesitate. Just simply ask away. Slide into our DMs on Instagram, follow us at Policybazaar.ae, or reach out to us via any of the other social media channels, and we'll try our best to answer your questions in the next episode. Today, however, we shall be taking up questions related to insurance-linked investment plans that we've received in our inbox. So, Pradeep sir, Atul, are we ready?
Yeah, go ahead.
Yes, please.
So the first question, Pradeep sir, is for you. Berman wants to ask, are there specific risks associated with investment-linked insurance plans denominated in USD or AED, especially during the global market downturns?
Yeah, very important question, Sid, especially when we were talking about linked investment plan. So when we call it linked, why it is linked? So it is linked with the market. So market, when we
Right.
talk about market, it is a market of global currencies. So equity market. So equity markets are the most volatile. So when market is volatile, by default, the products will also have volatility, especially on when we talk about the return on that.
Right.
So as far as risk is concerned on any of the investment product, there is always high risk, high gain, but you can achieve those gain by having a right strategy. And for that right strategy, we at LIC International and Policybazaar are helping clients to take a right methods to invest, especially during market downturn. Now, market has been very volatile recently. So the best way to go and invest through a systematic investment product. So you buy a product which gives you a flexibility to invest in a monthly mode, quarterly mode, not more than quarterly. At least you pay monthly so that the auto averaging of units takes place and it gives you a better yield down the line. That is number one. Number two, which I also suggest, if there is a risk is always good for wealth creation. You need to have a risk, but if you buy a product which does not have any risk, like in bank FDs and giving guarantee returns, their returns will not be beating your inflation. So end of the day, your inflation and returns is same, so you are not getting anything out of that. So take the risk,
Right.
take the help of professional advice, make it a systematic investment so that this risk, market risk, can be mitigated in a proper way. That's what advice I can give it to Varun on, especially on risk part.
All right. The second question is also coming in for Pradeep sir. Tanishk wants to know, how does investment linked insurance plans investing in USD or AED help investors achieve a more balanced and global diversified portfolio?
As we were mentioning since beginning, this US dollar investment itself is the first diversification. So diversification means, old saying is that don't put your all eggs in one basket. But at the same time,
Right.
you cannot buy five different vegetables and you make that it is become a diversified. So generally what people tend to have, they buy a product of real estate, one gold, one mutual fund, one insurance policy, and they say diversification happens. No. Diversification means you need to understand geography, where you are staying and which geography can give you a global stable return. That is number one. Number two, hedging against the currency risk, because currency is also going to eat away your return which your products provide. So that is number two, is also very important. Third is global stable currency you must invest. That's what we referring to invest in the US dollar product. Fourth is
Correct.
maximizing returns, especially when you buy a unit link product. Because what unit link products provides you, it provides you flexibilities. You can pay as and when in a systematic manner. There is no restrictions on. It becomes a liquid the moment locking period finish. And most of the products here in this market, there is no locking as such. Maximum it is 1 year. But again, I will
Right.
request, always equity market investments, you need to give certain time to get a better yield. But at any point of emergency, you buy any endowment insurance policies, that restricts your liquidity options. So you can't come out. If you have to come out, you have to put a lot of charges on the products. But in ULIP, in unit
Right.
link product, this is very fluid. You put it in any this. It's a so kind of product that you put it in any box. This takes that shape. So how it is. So, and you can partially withdraw. Sometimes you got a bonus. You don't have to buy a new policy. You just top up in the same products. Your capital appreciations will automatically happening. I think it's a whole life
Right.
concept which provides a full globally diversified portfolio. You don't have to buy an India product. You can buy across China, Hong Kong, exposed to the US market. So this is how UAE investors can take a benefit of this US dollar products.
Perfect. Tanishk, we hope you got your answer. And the third question is for Atul. And Basil is asking, how does the stability of USD or AED enhance the long-term returns of investment-linked insurance plans compared to the plans denominated in more volatile currencies?
Right. Thanks for the question, Basil. I think I'll answer that very simply. Over the last 10 years, the INR has depreciated 41% versus USD.
Right.
So if you had put, let's say, $1,000 in a USD investment 10 years ago versus the same amount in an INR investment, and hypothetically, if both yielded, let's say, 10 to 15% growth, you would have 40% more money today if you would have invested in USD product, because INR has depreciated 41% over the last 10 years. So, and which is a huge difference, right?
Correct.
Imagine you have $10,000 now versus $14,000. You could do, much differently with both the amounts. So yeah, that's the answer.
All right. Next question also, James wants to know, Atul, I think you can answer this one. What makes USD or AED based insurance linked plans particularly suitable for NRIs and expatriates compared to the local currency linked insurance plans?
So I think this question kind of summarizes the conversation we have had.
Yes.
Two significant factors which you should consider because why to invest in USD or AED denominated plans. One is, obviously, we have been discussing that there is depreciation of INR or maybe other currencies versus USD. So that is why investing in USD is significantly better. Second, obviously, if you were to invest in India, you would be subject to capital gains tax, and that will eat up into your investments, which will not be the case if you were investing in a product in UAE, which is denominated in dirhams or USD. So you have these two significant benefits, which will increase your investment significantly.
All right, then. So this brings us to the end of this segment, but don't go just yet. If you also have any questions about finance, about insurance, then simply ask away. DM us on Instagram, follow Policybazaar UAE, or reach out to us via any of the other social media channels, and we'll try our best to answer your questions in the next episode. For now, though, I hope you're all set and have decoded about the life insurance plans, which give you the benefit of market-linked returns and life cover in case of an unfortunate event. And is it better to invest in AED, USD versus INR? For now, though, thank you so much for this conversation. Pradeep sir, Atul, as always, a pleasure having you on the podcast.
Thank you, Sid.
Thank you, Sid.
Wish you the very best, and thank you so much for tuning in. That's it for today's episode, everyone. See you in the next one.
You were listening to Policybazaar.ae's The Policy Project. We've got you covered.